Opex versus Capex. Unlocking the secrets to smarter business spending. When it comes to running a business, understanding the difference between Opex and Capex is crucial. Opex and Capex refer to two types of expenses that a business may incur. Opex, or operational expenses, are costs that are incurred in the daily operations of the business. On the other hand, Capex, or capital expenditures, refer to expenses that a business incurs to purchase or improve assets that will provide long-term value. Opex and Capex can be easily confused, but it is important to distinguish between them. Operational expenses are incurred regularly, whereas capital expenditures are usually one-time expenses. Operational expenses are generally necessary to keep the business running, while capital expenditures are investments that are made to improve the business. Understanding Opex. Opex, or operational expenses, are the ongoing costs of running a business. These expenses are necessary for the daily operations of the business and are incurred regularly. Examples of Opex include salaries and wages, rent, utilities, insurance, and supplies. These expenses are typically tax-deductible and are reflected in the income statement of a business. Operational expenses are essential for the daily operation of a business. They can be fixed, such as rent or salaries, or variable, such as supplies or utilities. Fixed expenses remain constant, regardless of the level of production or sales, while variable expenses vary depending on the level of production or sales. Understanding Capex. Capex, or capital expenditures, refer to the money that a business spends on acquiring or improving assets that will provide long-term value. These expenses are usually one-time expenses and are not incurred regularly. Examples of Capex include purchasing land, buildings, machinery, or vehicles. These expenses are not tax-deductible and are reflected in the balance sheet of a business. Capital expenditures are investments made by a business to improve its long-term growth and profitability. These investments are typically made with the expectation of generating future revenue and profits. While Capex is a large expense upfront, it can provide a return on investment over time. Opex versus Capex. Understanding the difference between Opex and Capex is crucial for business owners. Operational expenses are necessary for the daily operation of a business, while capital expenditures are investments made to improve the business's long-term growth and profitability. By understanding these two types of expenses, businesses can better manage their finances and make informed decisions about where to allocate their resources. Are you ready to take seamless control of your business finances? Capex 360 is your ultimate solution for managing capital expenditures and integrating operational expenses. Don't let the complexity of financial management hold you back. Unlock the full potential of your business with Capex 360, where clarity meets efficiency. Take action now. Discover how Capex 360 can transform your financial strategy and drive long-term growth by booking your demo today.